Today's session, we're going to begin with a conversation with Eghosa Omoigui, Managing Partner of EchoVC. Eghosa, welcome to the show.
Thank you very much. Very glad to be here.
Well, let's get to know each other and let's get you introduced to our audience. Tell us about EchoVC. Tell us about yourself. What have you been up to, and what is EchoVC?
Sure, thanks. My name is Eghosa, and I'm managing partner and founder of EchoVC. We are a seed and early stage venture capital firm focused on making investments in technology and technology-enabled startups that have a primary market focus in Africa. So these firms may be everywhere around the world. We've done investments in different geographies. But the primary theme of their business models and their targeted products and services will be Africa. So what we essentially posit is that we finance Africa-focused entrepreneurial inspiration.
And how big is the fund?
So we are in the process of raising our second fund now. Our first fund, which was 5 years ago, had $16.5 million in initial commitments, and that was focused on seed and early stage. And then halfway through the last 5 years, we entered into a strategic partnership with TPG Growth, and later on TPG Rise Fund. And so we manage their Africa Small Check platform for them, which essentially gives us the ability to write much bigger checks.
Okay, very interesting. How did you get into this business of investing in Africa? What path did you follow in your career?
Well, I've had a somewhat non-traditional career, so if anyone tells you that you have to wear chinos and a denim shirt and get a Stanford MBA and end up being a VC, and precisely the counterpoint to that. I was raised in Nigeria, graduated as a lawyer, started out my career as an oil and gas lawyer as well as a corporate lawyer, then moved to the U.S. to go to school, University of Pennsylvania, did a degree in corporate law and finance, and did a whole bunch of different things, worked in a startup, worked as a consultant, worked in a law firm, and I ended up at Intel Capital, which then was the largest corporate venture capital firm in the world. I was fortunate enough to be there for about 10 years, and I did a variety of roles, which I think have contributed to everything I am today. But I did everything from venture capital legal, portfolio management legal, IP purchasing, patent purchasing, bankruptcy and restructuring, as well as investing in consumer internet mobile. I also led the investing activity in semantic technologies, which covered the umbrella of artificial intelligence, machine learning, computer vision, and augmented reality.
Great.
And then I left Intel in 2010, and then I started EchoVC the year after that.
Terrific. So, Eghosa, I'm personally deeply interested in Africa and what's happening in Africa and so forth. So, I would like to ask you to first start us out with some broad trends on what are entrepreneurs doing in Africa, what kinds of businesses are they building, and which of those are actually attracting investment? And then we'll come to your specific investments in a moment.
Sure. So I think when I started this process, so I'll give you the very quick, broad strokes of how this activity started. So Intel Capital, when I left, was operating in probably about 34, 35 countries, not Intel Capital, and had several hundred people supporting the activity. So what I learned from being part of that group was that innovation happened everywhere, and it was broadly distributed, but it could be very localized in terms of its impact, as well as global. And so I left Intel Capital with a hypothesis that the next generation of underserved sort of investing activity would occur in underserved emerging markets. And so I decided that it made sense to look at those emerging markets, and I ended up picking Southeast Asia and Sub-Saharan Africa, in part because they seem to me to be very highly correlated. And part of the recognition was that you had very similar sort of signals in these markets that suggested that they would sort of evolve essentially the same way, but more importantly, would represent sort of large opportunities for venture-style returns. And so I went out to pick those two markets. I had no luck because everybody thought I was insane. Those two markets were completely uninteresting, in 2011. But I then decided that, I was not going to quit. And so I picked one of those markets, which is Sub-Saharan Africa, and I went into that. Now, why was Sub-Saharan Africa interesting as was Southeast Asia was that those two markets represented in many sectors, ranging from consumer to business to education to healthcare to government to finance and fintech to agriculture, represented very significant opportunities for digital reinvention. And so with that as a backdrop, what we spent time looking for was key drivers to support that thesis that there was going to be a real opportunity for digital reinvention. And the market, so certainly Africa sort of represents a few, sort of suggests and shows a few key drivers. One is that Africa tends to be much younger demographics-wise. Nigeria, for instance, 200 million people, 70% of whom are under 30. Uganda, for instance, is there's arguably 85% are in their teens or less. So they were much younger demographically skewed. You found very significant, very rapid mobile broadband adoption, certainly the fastest growing in the world. You saw more increased investments in internet and internet-enabled infrastructure. And I think the real big mover was the affordability of connected devices. So, grateful to all the players in the ecosystem that have consistently driven innovation at increasingly lower prices. And so what that enabled was that you found these new markets that could leapfrog, through the distribution of both connectivity as well as the devices. And so Africa sort of represents the coalition of those key drivers. And if you now step back and said, what were the mega trends that were more applicable to African markets? One was that mobile platforms were reshaping distribution and consumption paradigms very dramatically. And I'll talk a little bit more specifically of things like services and M-Pesa. You saw a real opportunity to refactor financial services versus disrupt them, because there's a lot more fragility on the continent, so you have to do more refactoring and less disruption. And then I think the most important thing was that Africa represented, in our view as a manager, significantly large iceberg microeconomies. And what I would call them iceberg microeconomies was that there's always sort of, a lot of the big investors always think about macro, but a lot of these markets have these lurking microeconomies, and they're icebergs because nearly all of these microeconomies lie beneath the surface. And so when you apply sort of the key drivers, demographics, technology, broadband, internet infrastructure, and you apply that to these big mega trends, there were interesting things you could do with technology, whether it was, rise of mobile, digital marketplaces, doing education technology at real scale, being able to deliver high octane, ag tech related, disruption. So fundamentally, to tying that all together, Africa represented for us the next big thing, and that continues to be the case.
So let's talk about the view of the company. Maureen, somebody is
So,
screaming echo.
I'm sorry?
Okay, I'm going to try again.
Okay, go ahead.
Maureen, can you mute the line that is generating echo? I think it's Luis's line that is generating echo. It's really annoying.
That's fine. But I can hear you now. I mean, no pun intended. There's an echo on the line. That's hilarious. But
okay, so what I was going to take is examples of companies that you have invested in from your first fund, maybe, so we get a feel for what kind of things you've been investing in the past, and also to get a feel for what is happening in Africa and what kinds of businesses are being built. So we can do, 2, 3, 4 examples and take us into what did they have when they came to you? How did they come to you? And what is it about these companies that struck you as possibilities of, really building interesting, exciting ventures in the long run?
Sure. So we've invested in over 20 companies from seed, early stage, all the way to early growth. And I'll pick a couple of them and sort of, use them as examples of why they were interesting and, why we did them. So first of all, as a backup, what we've thought about and talked about at length is how to create investment thesis that sort of support the investing activity. And so we have 4 investment theses that we've talked about internally, but this will be the first time I think we're sharing them outside. One of them is that there's a recognition that in many submarkets within Africa, almost all the economic activity was offline and continues to be offline. And so there was a very large opportunity in our view, through which you could build some very defensible moats, where you could organize the offline and you then bring the offline online. And so one example of that that we invested in at the seed stage was a company called Printivo. And so Printivo is a lot like what people will recognize like a Vista Print or Printy and the like. And so what they've done is organize the print sector, but they did some very interesting and unique things in the business model and in the actual sort of user experience that we found particularly compelling. One of them was that they recognized that print was not just a very simple online service, which is you come online, you order your print, and it gets delivered. But that print represented more of a community of interest and of activity and of participants. So graphic designers, offline printers, the consumers. And so what Printivo did was to build a marketplace that looked more like a community and less like a marketplace. And they've done remarkably well since we invested in them. And for almost no money invested, less than $1 billion, they're profitable. And it's a classic example of a great entrepreneurial team, delivering real product market fit. We also have another thesis that we call lubricants, and we actually use that to define products and services, for these markets, the Africa-focused markets, again, with the recognition that there's a very significant amount of friction in day-to-day life. And for folks who sort of operate in the U.S. or in Europe, there are many things that we've taken for granted that don't exist in all the sub-African markets. And so friction sort of really creates, inhibits a lot of the efficiencies that we come to take for granted in other markets. And so what we had thought about was how to think about these types of markets, lubricants. And so one of the things that we like has been, removing friction. And so we invested, and this is a sort of somewhat, late stage company. Actually, you know what? I'll use the early stage company because it's interesting. So we invested in a company called Easy Shop, Easy Cook. We're actually very proud of the very random thing, which is that we probably have one of the deepest portfolios of women-founded tech startups in Africa. So we're very excited about that. But this is one of them. And the entrepreneur essentially, has created a supply chain optimization approach to farm to last mile. So organizing sort of fresh food, fresh produce, right? And then delivering that, processing that, and then delivering that to the end consumers, whether they're businesses or consumers. And the friction that in eliminating a lot of the friction in that process, one of the key advantages has been the fact that the economics to the producers is much better now. And then the value and the convenience to the consumers and the businesses on the other end is dramatically better as well. So that has worked. We just announced an investment in a company called WorldCover. We did that last week. We announced it last week. And that's InsurTech. It's a first InsurTech related investment. And WorldCover has built a very simple product and platform, but the first product is essentially to address climate risk as applies to smallholder farmers. And this is going to be a global business, right? Because it's good in Africa, it's good in India, it's good in Latin America. But they're operating in Africa right now, and fundamentally there was a recognition that farmers were making decisions around what to plant, where to plant, how to plant, based on sort of risk, but no one ever framed it in that way. And so one of the key drivers of decisions around about planting is about weather risk. And so WorldCover built a product that essentially neutralizes the weather risk. And it's a very simple product, and we like that a lot. It is growing quite quickly, and the farmers are becoming very comfortable with sort of thinking about risk and premium related coverage. And then the final thing is we've thought about these markets, I talked a little bit earlier on about the demographic lift in these markets and how young the market's skewed. So education is a very significant issue. These markets are growing very quickly. Nigeria, I believe, is adding 26,000 babies every day. And so, education and how you sort of create a pathway to household lift is a key part of this. And so we invested in a company called Kukua, which is out of the UK and Nairobi. And what they built is a platform for early age education meets STEM. And so, it highlights, essentially there's a heroine called, Sema. She has all these superpowers and she loves STEM. And so what that builds is the ability to learn, in a manner that works is, and essentially for African children and, African descent children, you start to sort of get introduced to these concepts very early, and it can be delivered in sort of bite-sized modules by mobile phone, by TV, but very different channels. So these are sort of how we've thought about the investments. We're very fortunate to have made, been able to partner with the companies that we've invested in, and continue to be very active in thinking broadly around inclusion, in thinking broadly around healthcare. We invested in a company called LifeBank that's optimizing the supply chain for access to blood and blood products. Again, another woman-led company. We invested in Grow Intelligence, which might be the largest agricultural data analytics platform in the world. Again, led by a woman. All right, so we've got an amazing portfolio. But what's interesting as well is that we're beginning to see more companies coming out of Africa that have a shot at being global companies.
Great. Eghosa, I have a few questions based on what you said. The first of which is, what are the backgrounds of these entrepreneurs? Have they grown up in Africa? Have they been educated in Africa? Did they leave and come back? What trends are you seeing in the entrepreneurs who are coming up with these concepts and businesses?
That's a good question. So what we find what we find consistently, or let me rephrase that. When we started this process, when everybody was like, Africa, there's nothing there, and you're insane, and we don't know why you're going there. It was just bone dry, right? Very few people sort of were doing anything, with tech and tech-enabled products. Then, a year or two after we got there, then, we started seeing more activity from the incubators in the U.S. And so what we found consistent with, I think, a lot of the foreign investors who tried sort of, who were investing in Africa, is that they tended to skew initially to entrepreneurs that looked like them or had backgrounds like them, right? And so if you were coming in, you had sort of the degrees from U.S. schools or UK schools or the like, that was sort of how you got in. But slowly but steadily, I still remember when Steve and Jean Case came to Lagos, and we hosted them, and Jean turned around and asked me, like, it was something she noticed. She said, she's meeting a lot of these entrepreneurs who went to HBS or MIT, who's investing in the local founders. And I was like, we are. And, and the truth was that we did and we continue to recognize that a lot of these local founders had maybe a better high resolution understanding of the local dynamics to operate in friction. And that was always sort of interesting to us. But we've also found that, we have founders who are not necessarily African, but care deeply about the continent, have been on the continent, they've lived there, they've worked there, and want to make changes there. So our portfolio is quite broadly diverse. It's mostly African founders, but we also have European and American founders as well.
Okay. And what about countries? You talk about Africa as a whole. What are the granular trends in the different countries within Africa?
So I think from our perspective, a lot of the initial activity sort of in the startup ecosystem was probably initially concentrated in sort of South Africa and East Africa, most importantly Kenya. Those two markets seem to have, I think, a lot of velocity around being able to attract expats, and of course that also, had offered a lot more liquidity in terms of being able to access angel funding and the like. But over the last 5 years, I would probably say that Nigeria has become sort of the undisputed center of sort of the more startup activity. Nigeria also represents the largest market in Africa from a people perspective. I believe 1 in 6 Black people in the world is Nigerian. And so it continues to represent the market. But we like, there are a bunch of countries in Africa we like for a variety of reasons. Nigeria, Ghana, Kenya, Uganda, Tanzania. In sports, South Africa. South Africa is not underserved for many reasons. So, we're sort of more opportunistic there. But, even Francophone Africa continues to be very interesting to us. We haven't done a lot of stuff there because of the language disconnect, but we're going to fix that this year. And then we like North Africa as well. North Africa, has always been interesting to us, but we're now beginning to see some real interesting companies. And, as with the exit of Kareem, people are now sort of pausing and saying, wait, you could build a big company that way. And I think that's similar to sort of Jumia now going public. People are like, wait, you can be African, however you want to define that, and you could build $1 billion business on the continent. That's interesting.
And my last trend question is B2B versus B2C. It sounds like it's largely a B2C entrepreneur pool. Is that a correct observation, or am I missing something? Actually,
it's the other way around.
Okay.
It's the other way around. And I think that probably has some sort of correlation with the difficulties associated with access to capital. So what you find more entrepreneurs doing is they enter businesses where your path to revenue is much shorter, and your path to repeatable is short, right? So no one is going to give you 3 years of financing to go build out a customer base and not monetize them. That's not going to happen. All right. So So that's the truth. So I mean, it then ends up being that there are very few sort of consumer-focused plays. We've done a few, but many investors sort of shirk from that. Many investors are more interested in B2B or software infrastructure plays.
Well, B2B is a lot more cost-effective to build than these large-scale consumer plays. Although there's one factor that is still true in Africa is that the mobile advertising or Google AdWords, all this is still cheap, which in other markets, other more developed markets, has become very expensive. So there is a way of being able to do online customer acquisition that is still affordable in Africa, which would not be true in America anymore, for example.
Correct, except that the market is mostly offline. And so it was in recognition of that, and we realized two things. One was the market was still very largely offline, and more importantly, the being able to create an advertising platform that would allow small and medium-sized businesses to advertise in their local environments was actually quite difficult. I mean, the opportunities were either in newspapers, which are very expensive, or very large billboards, which are very expensive. So we invested in a company that is doing extremely well, that essentially designed, in conjunction with their supplier, screens that were wirelessly enabled, and they got integrated into gas station pumps, and then now little tablets in retail stores, in cars, and they drive content and commerce and advertising, to these screens. And so what that does now is it enables, hyperlocal advertising. Essentially, it's AdSense for the real world. So that's one of the very large opportunities that we felt and continue to feel it's a gigantic opportunity.
And what is the that makes a lot of sense, actually. That's I was thinking more about your conversation about female founders. What is driving that trend?
So, we don't know. We're 45% women in my firm. So maybe that helps. I grew up in a household with strong, smart, driven women, and so that's sort of normal to me. And
but it's normal to you in terms of looking to invest in them, but it looks like there's enough deal flow, enough female entrepreneur-led deal flow, which is really what I'm exploring more than the fact that you're investing in them.
It feels to us that there is a deal flow. We have a lot of deal flow, right? We're 13 people strong. I could be 20. I have enough deal flow to have a 20-person firm, so the deal flow is very significant. But I think what it is more importantly though is that let me back up. So there's one interesting trend that we detected in our portfolio of women-led firms, and that is that every single one we've done is a solo founder.
Solo founder.
Correct.
Interesting.
So it's not that we're looking for women solo founders, right? It's ending up like everybody in the portfolio is exactly that. And we've talked about it, any specific reasons. But it ends up that women founders in these markets. I mean, that's not to denigrate how difficult it is for women founders in other markets to get funding and to get going. But in a lot of these, a lot of these sub-Saharan African markets, what you're finding is that they run into chauvinism, they run into patriarchy, and they run into sort of cultural dissonance, right? So there's all these expectations about what they should be doing, and running a business should not be that. So I think by the time you find a woman founder who's gotten started and just doesn't have any quit in her, your chances of making some significant returns on that woman founder just get much higher. And so, and what we're finding is that they start these businesses, they start them based around problems they deeply care about. problems that they focus on. They have some very important insights into those problems, and are able
Yeah.
to build solutions to solve those problems. So we've continued to be really amazed by the quality of the founders that we've seen and we've invested in, and continue to be amazed. And one sort of interesting piece of feedback about that is that I got something that one of the founders told me that one of the things that sort of made a difference to her was coming into our office, sitting at a conference table, and seeing all these women's faces looking back at her.
Good.
And that just
Very
made
good.
it different. Right.
Very
So, but we have some superstars. We're very happy with them, and we will continue to invest in them.
And what is the Facebook penetration status or social media penetration status in Africa? Is that a customer acquisition channel that is viable?
So I think Facebook has grown quite nicely. I think in Nigeria it's like 26 million now. I mean, a few years ago there were like 5, 6, 7 million. So it has grown quite nicely. And of course, the question, of course, is what is Facebook, right? Because Facebook is Facebook, Facebook is WhatsApp, and Facebook is Instagram. Right? Yeah. So if you look at Facebook via WhatsApp, that's very significant. Of course, they haven't sort of really sort of monetized that. They're slowly beginning to do that, starting with the work they're doing in India for WhatsApp for Business. But when you look at sort of the activity, Instagram, is continues to be a very significant driver of activity and attention in the African markets, and it's probably the same thing in a lot of the emerging markets. It represents a platform to showcase aspiration, whether or not it's genuine or not, and but it certainly garners a lot of attention. So Facebook as an advertising channel works absolutely.
Yeah. So where are you normally? Your profile says you're in Los Gatos, but where are you normally?
I'm everywhere and nowhere. That sounds like a Game of Thrones reference. I'm not sure. So no, what there's a fair amount of travel in my world. Being in the U.S., the East Coast, I was in New York, and before I'm in London today. I was in New York a few days ago. Before that, I was at the Milken Global Conference in LA, and back in Lagos. And this is then we're doing some stuff. We're closing a couple of deals. In Nairobi right now. So I could be anywhere and everywhere. So I'm a global region.
Give me a call or send me an email when you're back in Silicon Valley, and let's have coffee.
I would love to do that.
All right. Well, thank you very much. This is very interesting. As I said, I'm personally fascinated by Africa and this whole explosion of youth population in Africa, and what is going to happen. How is Africa going to manage the education challenge of this population, and so on and so forth. So I would love to continue the conversation, and thank you very much for coming today.
Thank you for having me, and thanks to Maureen for setting this up. I deeply appreciate it.
Bye-bye.